This is Business Insights, the home of business development, and that's because we fill you in on the major trade activities from all around the world, the market trends, so that you can make the best of your ventures. I am Olaoluwa Awe. Stay tuned for the most important business information in the globe. Welcome to the business news. I am Olaoluwa Awe. The Federal Competition and Consumer Protection Commission, FCCPC, has ordered Google to remove certain applications, including GetLoan, Swift Cash, Joy Cash, Camellia, and others from the Play Store. In total, 18 applications were ordered to be deleted. The Executive Vice Chairman and CEO of the FCCPC, Babatunde Rukera, stated that the Commission will continue engaging with Google to understand why these applications without relevant regulatory approvals were available on the Play Store in the first place. The guideline states that only digital money lenders, DMLs, that have received regulatory scrutiny and compliance approval from the Commission are allowed on the platform. Now, a recent study conducted by the National Bureau of Statistics, NBS, in collaboration with the Financial Access Initiative Research Center of New York University, has shed light on the challenges faced by small businesses in Nigeria. According to the study, many small businesses in the country earn an average monthly revenue of 223,250 naira, which is about $1,547, which is significantly lower compared to firms in other countries. The research, titled Nigeria's Small Firm Diaries, provided valuable insights into the financial lives of small businesses across various industries, including light manufacturing, agri-processing, and services. The data was collected from 161 small businesses in urban, suburban, and semi-rural areas surrounding Enugu, Kaduna, and Lagos between August 2021 and August 2022. One of the striking findings of the study was that half of the firms surveyed reported earning less than 223,250 naira in monthly revenue. Additionally, 46% of the small businesses were found to be holding loans, most of which were obtained from the informal sources such as suppliers, friends, and family. Despite economic challenges, the research revealed that many small business owners in Nigeria have high rates of bank account ownership in their businesses. In fact, 97% of small firm owners in Nigeria were found to have bank accounts, which is higher compared to Kenya, where 79% of bank owners or business owners have bank accounts, Colombia with 70%, and Indonesia with 65%. Now, away from that, over the past 10 years, reports have shown a significant decrease in foreign investment in Nigerian stock market. Factors such as prolonged forex illiquidity, inflation, high interest rates, and other economic challenges have contributed to this decline. The total foreign inflow to equities dropped by 90.6%, going from 43 billion naira in 2013 to 4.6 billion naira in March 2023. On the other hand, domestic transactions have shown an increase, rising from 71 billion naira in 2013 to 137 billion naira in March 2023, representing a 93.7% growth. However, experts are concerned about the sustained lack of interest from foreign investors in the stock market. They believe that the government should focus on inclusive growth and align monetary, fiscal, trade, and investment policies to boost economic activities across all sectors, including the stock market. Nigerian breweries, the producers of popular alcoholic and non-alcoholic beverages, has announced a price increase on all its products starting from August 10, 2023. The company cited the rising input costs and the need to mitigate their impact as the reasons for the price hike. In their half-year financial results, the company reported 70.6 billion naira in forex losses as of June 30, 2023. Nigerian Breweries, a subsidiary of Heineken NV, experienced a loss of 10.715 billion naira in the first quarter of 2023 compared to a profit of 13.61 billion naira in the first quarter of 2022, while International Brewery recorded a loss of 2.31 billion naira in the first quarter of 2023, contrasting with the 0.72 billion naira in the first quarter of 2022. Now, the price increase comes at a time when the alcohol landscape in Nigeria is expanding and Nigerians are showing an increasing interest in exploring a wider range of spirits from gin to cognac and whiskey. Creditors led by Apollo Global Management are nearing a deal to provide financial assistance to Yellow Core, a struggling trucking company facing bankruptcy. Apollo, as a major lender, is finalizing a debtor-in-possession financing agreement to support Yellow. The company, formerly known as YRC Worldwide, has been hit by a decline in e-commerce shipments and industry-wide freight volume reductions. Yellow recently averted a strike by workers but now faces debt payments of $1.3 billion due in 2024, including a $567.4 million term loan due in June and a $729.4 million US Treasury loan due in September. Shares of Yellow surged by 78% to $3.14 in the afternoon trade following the news. Meta Platforms, formerly known as Facebook, has unveiled its new open-source artificial intelligence tool called AudioCraft. This tool is designed to enable users to create music and audio content based on text prompts. AudioCraft includes three models, namely AudioGen, Encodec, and MusicGen, which cater to music sound and compression as well as audio generation. Meta revealed that MusicGen has been trained using company-owned and specially licensed music. However, there are concerns among artists and industry experts regarding potential copyright violations. Machine learning software like this works by recognizing and replicating patterns from data, which may include copyrighted content scrapped from the internet. Earlier this year, Alphabet Inc., the parent company of Google, introduced its own experimental AI tool for audio generation called MusicLM. And moving to the stocks market, we start with the close of trade in the Nigerian Stock Exchange NGX, where a total of 330 million shares were traded in 6,251 transactions. That was yesterday. This was worth about 4.3 billion Nigerian naira. If we compare this to the previous trading day, we see that the number of shares traded today or yesterday was 57% lower. The total value of the trades was 45% lower, and there were 21% fewer transactions. The total value of all companies listed on the Nigerian Stock Exchange is currently about 35 trillion Nigerian naira. Out of all the companies that are listed on the stock exchange, 115 of them were involved in trading. Among them, 31 saw their share prices increase, while 26 saw their share prices decrease. The company, that had the top gainers in share price was the National Salt Company, whose shares went up by 10%. This means their shares ended the day at a price of 35.75 naira per share. Other companies that saw significant increases were Abbey Mortgage Bank, Chams, and Skyway Aviation Handling Co. On the other hand, the company that had the top losers in share price was Thomas Wyatt Nigeria, with a drop of 10%. The shares ended the day at a price of 1.17 Nigerian naira per share. Other companies that saw significant decreases were the Initiates University Press, Omatech Ventures, and the company that had the highest trading volume was Transcorp Nigeria with about 58.8 million shares changing hands, followed by FBN Holdings 28 million, Eco Transnational 21.3 million shares, and Access Holdings 20.7 million shares traded. Still in Africa, trading session in the Nairobi Securities Exchange, NSE recorded a total of 9.5 million shares exchanged in 952 transactions. All these shares combined were worth about 78.4 million Kenyan shillings. If we compare these numbers to the last trading day, we see that the volume of shares traded yesterday was 58% lower. The total value of the trade was 57% lower, but there was a 5% increase in the number of transactions. The total value of all the companies listed on the Nairobi Securities Exchange is currently about 1.65 trillion Kenyan shillings. Similarly, at the close of trade in the Ghana Stock Exchange (GSE), a total of 423,341 shares were traded, which turned out to be a value of about 654,252.81 Ghanaian cedis. The overall value of all the companies listed on the Ghana Stock Exchange is presently around 73.7 billion Ghana cedis. Moving away from Africa to the U.S. Stock Exchange, the Dow Jones 30 Industrial Index, also known as the DJIA, finished at 35,282.52 points as at the last trading day. This means it went down by 348.16 points, which is about 0.98% decrease from the previous trading day. Still on the U.S. stocks, the Russell 2000 Index, also known as the RUT, closed at 1,978.70 points as at the last trading day. It increased by 2.10 points, which is about 0.12% higher compared to the previous trading day. And the Russell 2000 Index, the stock market index that tracks the performance of 2,000 small cap companies listed on the U.S. Stock Exchange. Now let's switch gears to the European stocks. The DAX 40 index, which represents the performance of 40 major companies listed on the Frankfurt Stock Exchange in Germany, closing trade at 16,020.02 points as at the last trading day. It decreased by 220.38 points, which is about 1.36% lower compared to the previous day's closing. Lastly, in stocks, the FTSE 100 index, a market index that tracks the performance of the 100 largest companies listed on the London Stock Exchange in the United Kingdom, closed at 7,561.63 points as at the last trading day. It decreased by 104.44 points, which is about 1.36% lower compared to the previous day's closing. Now let's examine the commodities market at present. The price of gold stands at $1,936.14 US per troy ounce, while silver is valued at $23.65 US per troy ounce. In the energy sector, Brent crude oil is being traded at $83.31 US per barrel. Now turning our attention to the agricultural commodities, cocoa is currently priced at 3,436.89 British pounds per ton, and wheat is quoted at $255.39 US per ton. On the other hand, the currency market has experienced significant fluctuations, starting with the Naira-dollar rate. The dollar opened at 784.91 Naira and saw a slight upward trend, closing at 756.94 Naira to a dollar. Moving on to the value of euro in Naira. Presently, the euro is valued at 832.76 Naira, and to acquire a British pound, it will cost 967.73 Naira. Finally, the Naira is currently standing at 5.29 against the Japanese yen, and it's exchanging for 209.53 against the United Arab Emirates dirham. And that concludes the market trend on Business Insight today. I am Olaoluwa Awe. Let's go get some insight into some of this business development. Stay tuned. It is time to make sense of the major business development from all around the world. I promised you that earlier on Business Insight. So welcome. I am Olaoluwa Awe, and to my left is Mr. Lateef Jimoh, our regular business analyst. Good morning. Welcome to the show.
Good morning.
Yes, you look quite chill today.
Thank you.
It's a Thursday after all. And also joining me via Zoom is a business analyst and a business consultant. His name is Wale Ogundari, and he runs a financial and management consulting firm focused on optimizing both supply and value chains in emerging markets. It's had over 26 years experience, in managing different retail companies all around the world. Good morning, Mr. Wale Ogundari. Good morning, Mr. Wale Ogundari. Okay, so while we are working on that, let me quickly engage you on the developments in the stock market. What are the things that you have been able to notice, since the last trading day?
Good morning. As you can see from the last 5 consecutive trading losses, I think the market rebounded yesterday. And we can see, although about like 21 or something percent APS, which is nothing to, but we believe with time goes on, we can see the sentiment is still coming off small, and things will get better soon.
So let me quickly engage you on the reports we read earlier, that over the past 10 years, there seems to have been a significant decrease in foreign investment in the Nigerian stock. According to the numbers, the total foreign inflow to equities dropped by 90.6%, going from 43 billion naira in 2013 to 4.6 billion naira in March 2023. What do you think is responsible for that?
Well, it's very simple, and you can look at it from the point of prolonged foreign exchange forex liquidity, inflation pressure, and other macroeconomic headwinds in terms of multiple taxation and such. So those are the areas I think basically that affect the foreign inflow. Because
to a layman, let's explain what this even means to a layman.
Well, foreign inflow is that for foreign directives are those investors that want to invest in the economy. And if they cannot, initially they can capital inflow into the economy, and they cannot repatriate that capital in terms of the capital and the additional money that gain out of, then there's a problem somewhere.
Don't forget we're talking about the stock market specifically. The
stock market, yes. Even stock market, they invest in your stock. Your stock market is a replica of what you produce and what you can sell.
But on the other hand, the report says that domestic transactions have shown an increase, rising from 71 billion.
The same 70.73 something.
Yeah, to about 137 billion in March 2023. So
that means there is a need, you can see that sentiment within the economy, that the domestic is gaining more investor coming in because of confidence they have in the government over time. But now, with the foreign, what the foreigner is looking at, then what, and that is very simple. How do I repatriate my fund back? Within the local economy, I'm paying in naira, I'm going to get my return in naira. See? So if somebody is investing, if an investor is investing in an economy on dollars, definitely they expect to repatriate his money back in dollars. So, and there are this blockage that did not allow them to have, so they won't find it easy coming in.
So generally, what do you think should be done to ensure that we have more foreign investments in the stock markets?
It's very simple. First of all, there's going to be, federal government need to have need to have a policy that stimulates foreign exchange inflow to be able to bridge the gap in terms of CBN intervention coming to play to bridge the gap between the supply and demand of the forex. So that's one of the things. Then the policy consistent in terms of the multiple taxation, just to harmonize those in terms of fiscal, monetary, and other trade policy need to be harmonized to be able to have a seamless transaction.
Well, thank you very much, Lateef Jimoh, and we are still hoping to talk to Wale Ogundari. Okay, I understand that he is now ready for us. Welcome to Business Insight, Wale Ogundari. Welcome to Business Insight, Wale Ogundari. Okay, so let me move away from that. Hopefully, when we can have Wale also have his opinion or his analysis on that. But let's talk about the decision taken by Nigerian breweries to increase price across the company's alcoholic and non-alcoholic beverages. And they are saying that the cost of doing business is rising. That's one of the reasons they gave. And they're citing the rising input cost and the need to mitigate their impact as a reason for the price hike. This is coming at a time when we're seeing new alcoholic companies coming into the country. In fact, Nigerians seem to be more receptive to these new brands. You know, do you think this is going to augur well for the Nigerian breweries at this point in time?
Well, it has, you know, it cut across all the, along the line of breweries, whatever, because whatever affects, you know, they have competitors along that line valuation. So what we're saying now is that if you look at I think you even reported that in June, second quarter, they lost about 7.6 billion, very huge. So, and then when you look at it, how would they, and it be attributed to the increase in inputs in terms of factor of production, all these things has, and they're not able to repatriate in terms of forex. That problem with that, the inflationary pressure is there. So the inflation is the major thing is inflationary. But when you talk of the cost push inflation or demand push inflation come into play here. Because what you buy yesterday, by the time you go back, actually increases, almost if not 2 or 3 times the initial price you buy. So all this affects the input, because the input will determine how much you're going to sell. The input has to be raw materials and other factor of production that they need to use to produce. If there increases in those prices, definitely going to affect the sale of production. Exactly. No, the cost of production will increase definitely. It's going to affect it because the price they're going to put in the market, that's what we call replacement cost. Replacement cost means that, okay, how much am I going to replace if I buy this thing? So if I buy this thing 100 naira today, and tomorrow I'm expecting to replace it at 15 naira, then I need to factor that price variation to it to be able to know what my selling price is. And it's simple. It affects the cost of goods sold in financial statement. All these things has a way of affecting your bottom line in terms of your profit.
But if one of the producers of alcoholic and non-alcoholic beverages in Nigeria, is recording this kind of loss and is increasing price across all products, what advice would you give the new ones coming? Because this also comes at a time when new people are investing in the alcoholic or the non-alcoholic beverage market in Nigeria. What advice would you, is this the best time to begin to import more of those products? Is this the best time to begin to set up those kinds of businesses in Nigeria?
First of all, I won't advise the import of the product, because as an importer, you are taking your money out in terms of foreign exchange. Going to affect your foreign exchange. But if it's produced locally, matter cost, we can still remember, it's a non-realized gain, because it does not the law does not come out of only inflation in terms of the foreign currency exchange. In fact, most of it is the foreign exchange loss. So this foreign exchange loss is a non-realized gain or loss that can be retracted on the long run. Although it will be reported in financial statement as a loss, but if we have a very good, robust foreign exchange policy in the near term, definitely it can reverse itself. They will say record the gain later, which can write off the losses over time.
So if you're discouraging importation, let's talk about local production. Is this the right time for this product to be locally produced? Is this a very lucrative time for us to have more of similar businesses?
Definitely going to be lucrative. All you need to do, what to buy is what to sell. But if I now import, for instance, if I have to import it, remember, the price I'm going to import in terms of foreign exchange is going to high. So look at that differential in terms of I think about $869 to $1 now. So if I'm going to import like 10, how much it's going to cost me? I'm still going to have, but if I can source that thing locally and do my business locally, because I'm going to be dealing with one currency, which is Naira, I think which is better to for the business.
Okay.
But and then the country on the long run will be able to save some money from foreign exchange intervention.
Thank you very much,
Thank
Lateef.
you.
Now, I understand Wale is with us now. Welcome back, Wale Ogundare. Welcome back, Wale. Okay, so I have to get back to you there. Let's talk about the market for alcoholic and non-alcoholic beverages. You know, is it that more Nigerians are getting interested in consuming similar products, or what exactly is influencing the influx of companies, of investors in this line of work or business?
When we talk about beverages, we're not talking in terms of alcohol. We are talking other small, less alcoholic drinks.
It is
like
alcohol.
So I look at the varieties.
Okay.
And then if you look at what is happening in the market itself, what's happening in the market is a market that is not yet saturated. Because look at the population of Nigeria in terms of the drink and the drinks you can. And we are a party-like persons. So there is this market that needs to be, in fact, it's
exploited.
And it's a very big. And then looking at the range of products you can, there are a lot of range of products, different kind of drink, different fast. You can look at different class of drink now, and it depends on how creative you are to be able to bring your market to bear. Then that's about you need to get to the market. You need to look at the consumer preference. What do they really need? And in this part of the Nigerian breweries, we sell more alcohol than in the north. So definitely those drink, and then look at this. In the north, I think like sweetening something, sweetening drinks. So those kind of area you can push in more like Coke, beverage, all those things down there, and the population will take it. That is, we still have population to deal with that particular expansion. That's what I'm saying.
But as it is now, I know that there used to be a time when this market was totally dominated, you know, by foreign imported drinks. But now we see a lot more local production. We see even Nigerian-owned businesses, you know, coming into the market. Are you saying that there's room for more? Is this you encouraging more Nigerians to invest in this market?
Like I said, it's kind of a huge market, talk of it. So definitely we invest in it, and then probably the curtailing the import aspect of it will allow the market, the local market to move. So in as much we have that market, and you can be creative, like the different kind of drink, like a small, don't be creative. You know, the children drinks are there, the aged drinks are there, the average. So they can be creative and try to bring your own to the market. But we see our population that can cover those particular. But thank God, I mean, there have been lesser importation, which allow you to move into that market and play your own game there.
Thank you very much. Wale Ogundare, thank you for joining us once again. Okay, so we were talking about the drinks and beverage markets in Nigeria. We're looking at it from the Nigerian breweries, a company that recently announced that there's going to be an increase in price across all of its products, talking about the popular alcoholic and non-alcoholic beverages that we know. And I asked him if this will actually work well or go well for the business, considering that we're beginning to see more players in the field. What do you think about this, Wale?
So for me, I always like to look at Nigeria and its business fundamentals. Every economy sits on a particular structural base, which is our overall infrastructure. So let me start first by sharing that Nigeria's total infrastructure stock, which means when you cost all of our infrastructure, and when I say infrastructure, I'm talking about power, which is energy, transport, agriculture, water, mining, ICT, health, you know, social infrastructure, security, housing, all of those things. The total cost of Nigeria's infrastructure relative to her GDP today is just about 25% of total GDP. The standard countries where you've seen a lot of young Nigerians migrate to is about 80% of their GDP. Why did I share that information? Any business that you're setting up in Nigeria today sits on that infrastructure pedestal. That is why you've seen a lot of things going on. The cost of goods that is being sold high. The selling administrative expenses of a lot of this, in this case, the beer manufacturer that you're making, high. The cost of finance, high. So whilst I always say, look, we have the population, just as the gentleman has said, and we can take it, the problem has always been the purchasing power. So anybody looking, or any business looking to expand in the Nigerian context today needs to take into cognizance, the lopsidedness that exists. We don't have the right infrastructure. We have the right number of people. We also do not have the right consuming or consumption power, to take on all of that. So you have to be very wary. On a final note, there's a World Bank report sometime in 2020 that said the number of Nigerians that can spend 150,000 naira and above is just 3.7 million. This is in a month. So how many Nigerians can afford to actually spend 150,000 naira and above every month? 3.7 million naira only. That tells you that the competition to cater to that 3.7 million people is extremely high. And therefore, the chokehold on what those 3.7 million people can actually spend on, is actually getting very thin. So people, businesses have to, put that into consideration whenever they want to carry out their expansionist policies.
Yeah, if you are saying that increasing price might not be the best considering the purchasing power of Nigerians, what then do you advise a company like Nigerian Breweries at a period like this?
Well, I think for me, they need to consolidate on what they currently have as a business. Because you see, if they decide to increase prices, obviously, we'll see the results in the next few months or so. What will typically happen is that the revenues will drop. They may experience a bit of a slight increase in their profits, which is normal because the prices have gone up. But the overall revenues are going to drop. So for me, my advice to them will be, because this is a business and they're out to make profit, increase your prices, which is the only way you can cater to what is going on within the environment. But have it at the back of your mind that there are consequences for that. Your overall top line revenue may be affected. The number of people who will look for substitute products are also going to increase. So a lot of those who traditionally will take 3-4 bottles of beer in a sitting, they can only afford one now, and then they'll start to drink our local burkutu, which is, again, a major plus for any sort of local manufacturer who sees the gap up front.
Thank you very much, Wale. While we were trying to get a hold of you earlier, we talked about the report that shows a decrease in foreign investment in the Nigerian stock markets, comparing what we had back then in 2013, which is about 43 billion naira, to what we have as at March 2023, which is about 4.6 billion naira. What do you have to say to that?
So there's a myriad of factors, responsible for decreased investment. And every single stock market at some point begins to reflect what is going on in the country. So if you look at our GDP growth rate, for instance, it has contracted in Q1 2023. If you look at our exchange rate, even though the thing is now floating, but between the I and E window and the black markets, there's still about 100 naira differential. If you look at our NPR, linked to interest rates, gone up slightly. If you look at our oil production, so-so. If you look at our forex reserves, so-so. If you look at our inflation on the high, you see, every single stock market at every point in time will speak to the macroeconomic fundamentals of any country. Nigeria right now, as I always like to put it, we're not a productive nation today because the fundamentals that aid production, which is why I shared statistics around infrastructure earlier, statistics that aid our productive potentials are currently low. They're not there. We're currently a mono economy relying solely on oil. And you know, one of the things I heard the presidency talk about a few days ago was that we've saved $1 trillion. These are not actually real savings. What they're trying to say is that we haven't gone to borrow monies to pay out as subsidies. So those monies do not exist in any shape or form, whether paper money, whether virtual money, they don't exist. They're just the opportunity cost, you know, that the nation has gained. So for me, until we find a way to diversify from this mono economy, a lot of the things around us, including the stock market, the performance will be poor. We all saw what happened in the Q1, not Q1, Q2 results of a lot of corporates, you know, just due to the exchange rate differentials alone. A lot of them reported billions in losses. So that is exactly what is going on with the stock exchange. And you see a lot of the monies, again, in conclusion, a lot of the monies that have come into Nigeria recently are foreign portfolio investments, which typically go into the stock exchange. You know, these are short-term monies. They look for opportunities of where to make monies, 3 months, 6 months, make the money come out. And when there are no ways to make those monies, the portfolio investments will stay exactly where they are, because monies will only go to where they can make more monies. They won't go to where they can potentially make losses.
Thank you for that explanation, Wole Ogundare. Now, let's move on. I'll get back to you.
No problem.
I remember that we have analyzed this particular business initially, Yellow Core, you know, one of the biggest trucking companies in the United States. But the update now is that creditors led by Apollo Global Management are nearing a deal to provide financial assistance to Yellow Core. I think, as at the last count, it has over 30,000 workers, over a company that is over 99 years old, about 100 years old, thereabout. And we're worried that such a company is winding up operation in the United States. But just to have an idea of why, to give people an idea of why they are closing up, it's because of their debts. We mentioned that the last time too. Yellow recently averted strike by workers, but faces debt payment of $1.3 billion due in 2014, including a $567.4 million term loan due in June and a $729.4 million U.S. Treasury loan due in September. But with this news that creditors are flocking in, the company's shares has improved by 78% according to reports. But now that we have investors coming in, what are the things that a company of that stature, of that nature, should consider before just letting anybody buy them? What kind of agreement should they even be making at this point?
First of all, I would like to say that the investors, you said creditors, are they their creditors or they are outside investors? I want to be able to distinguish. If they are creditors, that means the company is owing them something, and they are coming as a creditor buyout. They don't have a choice there. If it's an independent investor that's coming, it's a different ball entirely. Because they call it could even be a form of winding up. The creditor try to come in to buy you out, mean that you have to like go with their terms. You don't have a choice. It's a forced buy. So the way I understand it, if it's I want to be specific. So if it's the creditor buyout, definitely we need to like go with the terms, because more so the product of the company, how has it been done? How has it been doing on the market? Are people taking it up, or are they being creative enough to be able to earn more income?
The company has seen a decline in terms of e-commerce shipments. I think that's one of the reasons, for the issues there. Please go on.
Remember that if the creditors are buying it, they need to pay interest. This interest means that you need to earn more to be able to pay those money. Even if the new investors are coming, it depends on the risk aspect of the portfolio that is coming in. So you have to like look at it that if investors are coming in form of a new investor, maybe stock market or the venture, remember they will still need to have a return. They are not for the Christmas that just want to drop money. You need to factor in those, meaning that your revenue must improve to be able to cover the cost.
Thank you very much, Lateef. Let's get back to you, Wole. Help us make sense of what's happening here. You know, because there are a good number of struggling businesses who are close to, you know, closing up, and we need to learn a few things here. Help us understand what's really happening here, Wole.
Thank you very much, Ololuwa. I think the company needs to go back to its fundamentals. And by fundamentals, I mean, you know, they need to look at the entire operating structure. What has led us here? We're a very old company. You see, a lot of companies make the mistake of saying they want to do things the same old way. And they refuse to sort of grow up, you know, in terms of a trend to say what exactly, how exactly should we be operating these days? So from an operational, organizational goal perspective, you know, the organizational structure perspective, you know, and then one of the things that this gentleman mentioned, what exactly are they measuring at the strategic level? You know, if you've gone to collect some loans, what exactly are you measuring in terms of how you want to be successful? Then in terms of the processes and how they work, you know, how are their processes structured? You know, and then what kind of people work in these places? What is the mindset? You know, a lot of businesses always tend to forget that those fundamentals are exactly what, you know, those are the things responsible for the success or the failure of any business. I even like to add one more layer to say there's a gentleman called Simon Sinek, you know, who talked about people don't buy what you do, they buy why you do it. Let me repeat that. People don't buy what you do, which is in this case trucking service, and you know, and all of these things that they provide, logistics and stuff. People don't buy what they do, which is those things. They buy why they do it. So has Yellow been able to define why they're in business? And you see, why you're in business is your purpose, which typically goes beyond whether you're making money or whatever it is. You know, the fundamental why are you in business? You know, does Yellow understand that? Because that is what now helps you transcend a lot of the challenges that you're facing. That is how you communicate to the people. That is how you plan your strategy. That is how you structure your operational processes. That is how you hire the people that will be working with you. So they need to go back to those fundamentals and really, really do a rejig of the business. I think that is what will lead them out of this, or else they're going to go into extinction, just like this phone manufacturer back in the day, BlackBerry, if I remember well. And the guys at BlackBerry, if you remember what they said, we didn't do anything wrong. Yes, you didn't do anything wrong. You were just carrying on business as if the world isn't changing. People must learn to grow with the times when they're running businesses.
I know you mentioned something like that the very last time we talked about.
We talk about. We just mentioned something very, and that is mission statement. Why do you? Reason for the existence of the company. Why are you operating? You need to really. I need to be creative. We talk about strategic planning and all those things, which is very germane to business decision. I said the logistic company needs to sit down, look at where they are coming from. How do we get better? And what do I stand for in terms of my mission? Some people look at mission, if it's not well crafted, you may be looking at a blurred vision rather than because you've already assumed what you cannot do. They need to sit within that comfort, craft a very well defined or the reason why they are existing. So this kind of thing will give them a roadmap. Even in the financing, it's part of the thing that because by the time you bring out a very clear vision, you will know how to which kind of financing do I need to do to be able to meet up with that. So all these things will be planned out. I agree with him totally.
Now, let's quickly touch on what's going on with Meta. You know, the company has unveiled its new open source artificial intelligence tool called Audiocraft. As mentioned earlier, this Audiocraft will be able to generate audio, compress, cater to music. And this is getting people in this line of work worried. If we're beginning to have artificial intelligence that would create music, create beats, generate, basically it's based on the feeds that you give it as other just like other artificial intelligence applications. But people are worried, and are they right to be worried? They're talking about, because you also build these artificial intelligence applications with existing music that you have. But people are worried that, are they not going to, if they use my own music, my style of creating to create artificial intelligence, that will most likely take me out of job. So what are the things that you have seen in this area?
First of all, I'm not really versed in the area of technology, but I'm going to delete one I know on it. That really, before the development of artificial intelligence, what are those things that the company has been taken care of in terms of which inputs will I use to make it up? And it depends on the cost, because I don't know the fear, what the worry is. Is it the worry on the part of the developer or somebody that are using their music on? Is it the term of cost?
Okay, so the worry has majorly been from music producers. I mean, real human music producers who feel like this artificial intelligence might come to take us out of a job, because you have an application that will be able to do, majorly some of the things that we are doing. But let me engage Wale on this. I know Wale.
Just a minute. Before okay. Wale, remember one thing is this: technologies has come to take over conventional way of doing things. So if you are giving me the music and I'm going to use it, and it's going to make me more, because it allows you to be sitting in the comfort of the comfort zone to develop different music. Somebody will be using it to save you a lot of marketing and all that cost. So which to me is better for me to be able to get to people with a very low, I don't know the manner at which they derive their money from, but I think it's better way to go. If artificial intelligence is the way to go, so be by me.
Well, Wale, I know that you are quite vast when it comes to emerging markets. How much do you think this audio producing artificial intelligence can do compared to what human music producers already do?
Okay, so fundamentally, let me talk about AI. Fundamentally, what AI seeks to do is that if you've traditionally spent an hour doing something, artificial intelligence now helps you do it in 5 minutes instead of spending 1 hour. Okay. I don't see any reason for the current players to be afraid. They only need to improve on their creativity. Remember, this is what we were saying just now about a business needing to redefine itself. So if you look at the range of industrial revolutions that has occurred, over the last decades, we're currently in about the Industrial Revolution 5 now. We're going past the age of computers. We're going into the age of artificial intelligence. And, regardless of whatever you're doing, you see AI is all over the place now, So the fact that it's been used in music now doesn't mean that the guys need to start panicking. It's been all over the place. If you're trying to do some sort of research, AI can help you do it. It only helps you do things much faster, not necessarily as accurate as it should be, but it makes you do it much faster. So those that create beats, if an AI is trying to create or imitate or mimic your beat, it behoves you to go back into the studio and, create some sort of, be more creative around the kinds of beats that you've traditionally created. If you look at Nigerian music as an example, you'll notice there are certain songs that just have like the same kind of beat. Once you're listening to the beat, you feel like I've heard this beat somewhere before. That is a bit of poor creativity. So what AI will now start forcing you to do is to stay, and be a bit more creative, because a lot of the baseline creativity is going to take care of it, on behalf of people who are looking for that. The extra that now goes above the AI now behoves on the current players to redefine themselves, in terms of their craft, and really use AI as a stepping stone instead of being afraid of AI taking away some of the things that they're currently doing and rendering them out of pocket. I think AI is a very
lastly,
good thing,
as
and
we
it's here
conclude
to
with this
stay.
story, one of the areas calling for concern is the copyrights people are talking about, because these applications, you're going to feed these applications or by replicating patterns, or these applications work by replicating patterns that are already existing. They're going to be using, the patterns and the style that we already have in existing songs. People are worried that some of these AI companies would use their own intellectual property to build applications like this. So how can we manage this area? How can we ensure that people's copyrights are not infringed upon?
Talking about the copyright, I think there's the fundamental issue here. And I believe before you enter any contract, in terms of that magnitude, there must be a contractual agreement between you and whoever wants to play with you on that particular, and give him the area that I think is not. But recall, most of these bits can be redefined. AI has an application. It may have given one particular other bit, somebody will define it another bit. It's an artificial intelligence.
But who pays for the original work that was redefined?
The original work is still within your own. No, I believe if you have a good contractual agreement with, nobody can. Definitely infringing
so are
rights.
you saying that these AI making companies should ensure that they seek the consent of the original owners of some of the songs they're going to be feeding?
But like I said, they can replicate that particular bit in another way that may even look different. This is AI we're talking about. I can give one bit now. The same bit can be manipulated to give another sort of bit that it may not even look like what I'm talking about. So maybe it's a bass or treble word. They will change everything. And I've seen music like that you hear Whitney Houston somewhere here now. He has the same sound of Whitney Houston instrumental in a different version. Those kind of, I believe with the good contractual agreement, I think they can.
Well, do you agree with that as we go? As we leave the show?
Oh yes, I completely agree. Slight variations, and you're out of any sort of infringement. It's just a slight variation on all the things that exist. Look, creating brand new things in the world that we live today, is rare in most cases. That's completely moving in what we call the blue ocean sphere. A lot of what occurs these days are slight variations, of what currently exists, to recreate it in a way that, it either sounds better, it sounds more appealing and stuff like that. So the AI, by the way that it works, tends to look at all of the things that exist and then recreates it before giving you an output. So it will not just be copying existing songs and saying that's the output. No, it doesn't do that, because I've already seen how it works in the business sphere. It will always pick up things, recreate it in such a way that if you use it in business, for instance, and you check, there's a way you can check the internet to see if you are infringing on existing works and stuff like that. What you will find is that, it will come back with the result that you're not infringing on anything. So it's the same thing with the music. It will check it, it will recreate it, and just come up with a slightly different sort of output.
Thank you very much for your time on Business
You find out you're not
Insight.
infringing on anybody's copyright.
Oh, thank you very much for your time on Business Insight, Wole Ogundare. These are issues that we even have in the music industry. Artificial intelligence aside, you see somebody sing a song, but because he modified an already existing song, maybe put a spice to it, change the tune, you see the initial musician claiming the song and all of that. But our time is fast playing now. We have to go.
Okay.
I will continue to have this conversation so that we can have the best output. But thank you very much for your time.
Thank you very much. I appreciate it.
And I am Olaoluwa Awe. Thank you all for watching Business Insight today. We'll continue tomorrow, 10 o'clock to 11 o'clock on Souq News. Have a nice day.
Nice one.